Good morning, traders. It is the 5th of August 2015 on Wednesday, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not too much news overnight. A couple of items of importance. Mostly Fed's Lockhart coming out last night in an interview with Wall Street Journal's Hilsenrath, saying the economy is ready for liftoff. September could be appropriate, would need significant data deterioration to convince me to put off hiking. For me, there's a higher bar for not acting. Also, Fed's Powell this morning at 6:30 Central. He's a moderate FOMC voter. Nothing has been decided regarding the September FOMC meeting. Seeing good growth and better than reasonable job growth. And then just at 7:15, about 45 minutes ago, July ADP employment change came out. Slightly worse, came in at 185,000 versus 215,000 estimated. There was a quick move on the overnight session based on that. Quick spike up, which the market has somewhat retraced just now. At 7:30 Central, we got the June trade balance. Came in at negative 43.8 billion, slightly worse than the expected 43 billion negative. The European session overnight, mostly higher following commentary from Fed members, leading dealers to consider an interest rate hike, an interest rate rise next month. Greek equities continue to underperform, with bank shares opening down 7.9%. Remember, that stock market has taken quite a hit this week after reopening. Asian markets closed mixed. Oil is higher, gold is lower, US dollar at a 3-month high. The US dollar is lower versus the pound, higher versus the yen, higher versus the euro. Looking ahead at the session and what we have coming, looks like we have ISM U.S. Services PMI at 8:45. It's 15 minutes after the open. Expecting 55.2. The range is 55.2 to 50. The range is 55 to 58. Again, Services PMI expected at 55.2. We're looking for ISM non-manufacturing at 9 o'clock Central, 10 Eastern, expecting 56.2. And then we have DOE U.S. crude oil inventories, and we're looking for negative 1.63 million barrels there. Distillates positive 1.25 million, and gasoline inventories at 0. Not seeing anything major as far as earnings pre-open. Nothing major came through. Not seeing anything after the market either. So that's it for the setup. Got that done in 2 minutes. It's not bad. And let's look at what happened yesterday and talk about what we expected versus what happened, which is the whole point here. Let's step back for a second and take a large picture overview. So this is a composite chart. This shows what the market has done on a daily basis. Each bar represents a day of regular trading hour trading or pit trading. This does not include the night session, so if your highs and lows look different, that may be the cause. The other reason it could be different is because this chart is equalized for the futures premium on every rollover. So the all-time high is still 21.26 quarter. We took out the 21.2450, 26 quarter, and it pulled back to 56.50. We have since bounced to 21.0850 and have been pulling back. Been on a selling spree for several days now. When we include yesterday's volume, we see that not much of an effect. We traded yesterday inside of Monday. I was looking for a breach of 2080 yesterday. Did not happen. Let me go over the hypothesis for yesterday. Let me pull up my notes here from yesterday's journal entry. for my hypotheses. Okay, it reads, expectations today for the primary hypothesis is open in range to chop around OAIR, opening type, open auction in range. Looking for a drop to 86.50 for a test and attempt for a test to drop to 86.50 for a test. Attempt to rally and fail back down to 82.50. Chop there for a bit and then continue lower to take out 2080. Extended target 2066 on any aggressive selling. Hypothesis 2, open in range to drop to 2086. So let's look at how that primary hypothesis worked out. We had an open auction in range. You could see here two-way action, dropping, pushing back through, and then getting stuck inside of the opening swing. You see that? The opening swing tested back and forth. Okay, that's as open auction as it gets. It did try to push higher and it failed. It ultimately pushed down into 87 right here, missed the 86.50 by 2 ticks. Our primary target was right there, and so that primary target comes from the LVN here. Then it pushes up. That's what it says here. Drop to 86.50 for a test. Attempt to rally and fail back down to 82.50, and here it is. It rallies, chops around, and then it pushes down to the 82.50. This is the 82.50 next target. It got to 81.50. And then we got the bounce, and then later we had the sell-off. So Hypo 1 on the nose on several of those levels. It pushed through the low by 4 ticks. Could not get, it failed to get this 80, this week low. It failed to get down here, and it ran out of time. On the close, I was commenting on the order flow in the chat room. In the S5 chat room, and we were looking for it to ride back up to 88 actually, and it ended up selling off into the close after the cash close. It got to 87.50, but it could not push any higher. But overall, if you look at yesterday's action, just followed the blueprint that we were expecting for Hypo 1 yesterday. Hypothesis 2, open in range to drop to 86.50. Open in range to drop to 86.50, balance chop, look for balance chop, and then looking for buyers to push back up through 89.50, and then continue to 93.50, which actually is the 93.50 is actually the OS high, and then looking for it to push through to 21.03. 21.03. That plan clearly did not work, but again, hypothesis 1 did. So that's where we left off yesterday. You could the key things to take away from yesterday are that it again opened in range just like it did the day before. Very choppy. Remember, the overnight inventory coming into yesterday's trading was balanced. There was a range extension down. So we had a small range extension down, and then it continued lower. Range extension means it took out the IB by more than 3 ticks. And it finally dropped to 81.50 in the afternoon and closed the naked point of control that was left behind on Monday. This was an inside day. The high and the low are inside of the prior day's range, and then the profile finished up its point of control inside of the prior day's value area, which is right there. So completely balanced, and because it's completely balanced, we now have to look at this and draw a micro composite around it to see what the key areas are, and we identify this as the most valuable price in the 2 days, and then the second HVN, the next key valuable price, is down at 82.50. So we're looking at 91 even and 82.50 as the key areas in balance here. And then overnight we've rallied, we've pushed through We've pushed through the high. Where did we go? 2103 quarter. Recall 2103 was hypo 2's was yesterday's hypo 2 high, as it says here. Continue to take out the overnight high at 93.50 with a target of 2103.75. We stopped just short by 2 ticks, as you can see here. So pretty methodical auction. This morning we are opening above in a gap. Last night, this is what it looked like. We recovered that 88 that we're talking about yesterday afternoon, and it just took off with ADP coming in right there, and then spiking up, and this what we have from yesterday is a very trend-like profile with a pretty high volume, 194,000 traded. We've been in the 120 to 140,000 contracts in the Globex session before this. So overall, we have an inventory imbalance that is on the buy side. A lot of buyers in here. Again, trend profile, the point of control overnight is near highs, with the high up against our key HVN, composite HVN that we've been playing with for the last week or so, 2103.75. So this morning, the primary expectation is for an initial attempt higher, and I expect it to fight quite a bit. I expect a responsive selling to bring us back into 2096 quarter, and then potentially down to 2093.50. If it's not able to hold in this area, in the 2093.50 or so, if it's not able to hold in this area, then chances are it's going to touch this MC point of control. We're trading the MC here. We're trading the micro composite I just drew in front of you, rather than what happened yesterday and the day before. We need to look at the composite in this situation. And so once it gets to the point of control, if it's not able to leave and get out of 93.50 again, then chances are you're likely to see this 82.50 again. That's not the expectation for today, though. The primary hypo is for it to chop, pull back to 93.50, and then test this 2103.75 and start working its way back up the ladder to higher prices, with the 2112.50 being the ultimate goal. That's the primary hypothesis for today. Secondary hypothesis: test higher early, then get responsive, bounce off of 93.50, chop around, fall into the MC point of control at 91, and then regain back the value area of the MC, and then start working towards 82.50 again. That would be hypo 2. Okay, that's a lot to cover, a lot of talking, I know, but that's how things are laying out. There are other hypos that can play out. The goal today is to find out which one the market selects, which one the larger participants are shooting for, and then to find a spot to lean against and to go in that direction, take a trade, a pullback, preferably a pullback rather than a breakout in that direction. My time is up. I'll leave you with that. I released the Trade Wisdom segment yesterday. It went on Twitter. I have it scheduled to pop up on Twitter here and there and everywhere. So if you've seen it and get tired of it, I apologize, but I have to make sure that it gets the distribution. So it'll come up on Twitter, or you can check the hash FT71 stream and pick it up there. But the Trade Wisdom segment on success in trading has been released. I hope you find it useful. Good luck today. I'll catch you tomorrow.